Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abati. Good morning, Ayo Oga Bosin, the legend. Good morning to you, sir. Good morning to all our viewers out there. Happy Friday. We round things off today. We kick off with oil. Oil prices. Look, despite everything going on, the airstrikes from Israel into Lebanon, oil prices still fell. I mean, they're still range bound in the $70 region. Brent crude at 74, coming down by 7 basis points. You see West Texas Intermediate, North American grade 71.80. So, I mean, they did inch up. It was 73 yesterday. They came up a little bit above, almost nearing 75 for Brent, but then coming down again. The rate cut helped with that. So it looks like the demand-supply dynamics for oil are still overriding what we're seeing as far as geopolitical concerns. And as always, Nigeria's benchmark there, as a reminder, 77.96. Asian markets pointing up, of course, following the rate cuts and a number of central bank decisions. We're going to get through all of them this week. Shanghai Composite Index was down, though, 24 basis points. People's Bank of China holding their lending rates. They didn't make any choice. I don't know what China wants to do in terms of boosting their property market and elsewhere. Xi Jinping just doesn't want to give direct stimulus to participants in the market. So anyway, China is down, but everyone else, Japan, Nikkei 225, the Kospi in Korea, the Hang Seng in Hong Kong, all up. Leila Johnson-Salami already touched on this in the headlines. U.S. markets, a new high for the S&P 500, 5,713 points. I was listening to a market analyst. He is predicting 6,000 points for the S&P. So I encourage people, diversify your portfolio. Look to Europe, the U.S., North America. You can just buy an index. You don't really have to now start looking at which stock is going up and down because the markets are making investors money. Dow Jones, 42,000 points, up by 1.26%. This was yesterday. So the rate cut has really boosted optimism in the markets. Let's now get to what was, as we said, we previewed this on Monday. It was a massive week for central banks. So you should have a chart in front of you showing you all the decisions. In fact, we couldn't even put all of them. Indonesia is not there. Angola is not there. But, we had 3 rate cuts of the 8 you're looking at right now. 4 holds and 1 rate hike. So quickly, just to round off for anyone that missed what happened this week, the U.S. Federal Reserve, Jerome Powell, they did cut rates by 50 basis points. I got that wrong. I thought it was going to be 25. Jerome Powell has said that the U.S. economy is still strong, and the dot plot has pointed to possibly either 150 basis point cut or another 2 before we close at the year. And interesting enough, the next meeting will be right after the U.S. election. So very interesting there. We're going to go across the top row. So moving right next to Jerome Powell is Hong Kong. The HKMA, that is the Hong Kong Markets Authority that's run by Howard Lee. Hong Kong moves in lockstep with the United States. So they also cut their rates by 50 basis points to 5.25%. Mr. Lee said that market liquidity is still pretty healthy in Hong Kong. You had banks also like HSBC cutting their lending rates by about 25 basis points. Hong Kong, of course, they peg the Hong Kong dollar to the US dollar and they move in a tight range between, I think, about 7.15 to 7.25. That's 7 Hong Kong dollars, 15 to the US dollar to about 7.25. That's the range in which they move. So as far as Hong Kong is concerned, they're pretty optimistic about where things are going in terms of rates. We move on there to the right, to the right of Mr. Lee, to Andrew Bailey and the Bank of England. They held rates yesterday. It was expected by the markets. They held and they're at 5%. However, Deutsche Bank sees another one more 25 basis point cut coming later on this year to 4.75 and possibly more cuts in the first quarter of 2025. The Bank of England also announced that it will be reducing its holding of government bonds to the tune of about £100 billion over the next 12 months. And when we talk about the handshake between monetary policy and fiscal policy, remember that Keir Starmer and the Labour Party want to build 1.5 million homes in the UK. So if you want to build 1.5 million homes, you need lower interest rates in order to make mortgages more affordable. And I shared data with you earlier on this week on the supply side. sellers of homes in the UK are seeing construction ramping up, and they're expecting more demand with rates coming down over in the UK. We move on to the only woman on this list, and thanks Zeus, there's at least one woman here. That's Norway. Norway also, they actually held rates at 4.5%. We're looking at the Nordsbank. Ida Woldenbach, she's been the head of Norway's central bank since 2022. She is the first woman to hold that position. She says that there will be no more movements on rates until the end to the end of this year. The next easing of rates in Norway is going to be in the first quarter of 2025. The Norwegian krone has actually been weakening against the US dollar, and that has been making the fight against inflation pretty tough. Inflation, I think, in Norway, last check for August was about 2.6%, which is well above their target. Now we come down to the second row to the bottom left. Early this morning, about 4 a.m. this morning, the Bank of Japan, I actually did get this one right. I got the US wrong, but I got this one right. The Bank of Japan did hold rates at 0.25%. Remember, back in March, the Bank of Japan exited from their negative realm of rates back in March, and then they hiked in July, 0.25%. Inflation, though, is still rising in Japan. Core inflation coming in at about 2.8% the last check. Core inflation, when you remove the more volatile food and energy items, coming in at about 2.2, I believe. So as far as Japan is concerned, wages are still rising, and they still expect inflation to continue to remain upwards. But some market participants are expecting that we might get another hike, possibly before the year is over in Japan. We move from there to Brazil, the only rate hike that we got so far this week. Roberto Campo Neto, who is actually leaving office at the end of this year, Ignacio Lula da Silva, the president of Brazil, has already nominated the director of monetary policy in Brazil's central bank, Gabriel Golipolo. He is going to be taking over from January. But Brazil has said that the labor market is pretty tight. Inflation is rising, and so they had to hike rates. I think it's the first time that we're seeing a rate hike in quite a while for Brazil. And also, the last inflation check was about 4.35%. Brazil's benchmark, Brazil's range is 3% plus 1.5% for a little bit of room. So their ceiling is about 4.5%. So the 4.3% inflation is to the higher end of Brazil's ceiling. So Brazil, of course, is the outlier, if you will, the only bank so far, at least in this past week, to raise rates. Then we go to Turkey, which has been quite an interesting central bank over the last couple of years. Fatih Karahan. Now, remember, Fatih Karahan, if it wasn't for the fact that Hafiz Erkan, who was the first woman to run the central bank in Turkey, if she had not resigned after only a year in office, we would have had 2 women on this display in front of you now running central banks. But unfortunately, because of some issues with nepotism and her family, she was accused of some things. She resigned after only a year in office. So Recep Erdogan put the deputy governor there, Fatih Karahan. So Turkey, as you know, they, of course, held interest rates. They at 50%. This is now 6 months in a row since the jumbo 500 basis point hike that we saw in March. In May of this year, inflation peaked at 75% in Turkey. But since that time, going to August, it has come down to about 43%. The central bank says that they expect inflation to taper out at 42% to end the year. But you know, the lira is trading at about 34 to the dollar. They seem to be trying to right the ship with all the madness. Thinking of madness, in March of last year, this rates in Turkey was 8%. Think about that. You're going from 8% last year when Erdogan was turning things upside down. So Turkey is trying to move forward. And then to South Africa, Leseta Hanyego, he had, of course, his press conference yesterday. South Africa did, in fact, cut their benchmark rate by 25 basis points to 8%. They just got inflation a day before, reported on that. Inflation easing to 4.3%. This is in between the 3 to 6% range for the South African Reserve Bank. South Africa actually does see inflation continuing to decelerate, and so it looks like we might get, they didn't really give an indication, but they said they will follow the data. we should expect more rate cuts to come from South Africa. And they, of course, like the United States and like the UK, cutting rates for the first time since about 2020. Of course, the UK did that prior, before this hold. So that's our roundup for what we saw. And then, again, we couldn't fit everybody in here. Angola held their benchmark rate at 19.5%. Indonesia cut their rate for the first time in 3 years, so I think about 6%. And then we moved to Nigeria. So, of course, Nigeria is next week. All eyes on Nigeria. I think Monday and Tuesday of next week, we will, of course, be getting a decision. Remember, in July, rates were hiked to 26.75. Inflation has been easing. We're at 31.25 for the most recent print. And we debated this earlier this week, right? You have Financial Derivatives Company Limited saying that inflation is likely to climb in this month or in September because of the hike in fuel prices. However, Cardinal Stone, Vetiva Capital Management, they both believe that the harvest will override whatever impact we're going to see from PMS prices. So it remains to be seen where inflation is. So the question now is this. If you are the Monetary Policy Committee in Nigeria, I think they're going to hold. So that's my prediction. I'm looking forward to hear what Bosun thinks they will do. I think they will hold because inflation has decelerated for consecutive months now. Or if you are thinking they might hike, they could hike because they want to head off whatever increase in inflation might happen in September. So the debate is out there. It's pretty interesting. We'll see what happens next week. That's our central bank roundup for today.
Rotus, I'm sure a very excellent job. You got some time to sleep? Because you followed all the central banks and
no, I didn't, Bosun. No, I have to go to sleep after this segment.
You really need it, because if I'm going to give you more job, I'm going to add Saudi Arabia, Qatar, UAE. Yesterday, interest rate cut by these three big economies within the Middle East as well to your portfolio, and that's a whole lot. But I think my takeaway was what the IMF said for emerging and developing countries. And IMF yesterday says the 50 basis points caught by U.S. Fed, and I call it Fed rally because the stock market rally after that. It's a bit of a Fed rally, but a Fed rally. That's what we're seeing right now. That's what you just showed us, that the rate cut, 50 basis points, give every developing and emerging countries the room for FX liquidity to flow into their economies. But you need to do a whole lot of work. So what the U.S. Fed has done is to turn on the tap, plug into the pipeline if you know how to run your economy, and you can see things move on very well. So the door is open. We need to take advantage of that, and that's what we expect Cardoso and the rest of his team to do next week. Ghana's decision will be on the same day with Nigeria on the 24th. South Africa did yesterday. That took prime lending in South Africa down to 11.8%. 11.5%, because the repo rate came down to 8%. And that means that if you're taking bank loan in South Africa now, you're paying 11.5%. In Nigeria, you're doing about 32%, depending on if I go in, I'm going to get about 40%, by the way, because I'm not too sure. But Dr. Abati will get it maybe at about 20%. Ayo maybe at about 8% if you just take a look at that. But a very good job you've done there. Quite an interesting season right now. September is the most crucial month, by the way. Of course, everyone knows, for interest rate decision anywhere in the world. Once September is done, November is just a Christmas rate cut. You just wait until next year. Great job, Rotus. Good morning.
All right, Rotus, thanks. But let me talk about a report in this day newspaper where the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, had at an event yesterday. It was actually the Access Finance Forum, hosted by Access Corporation. Mr. Bosun was host there. I moderated the panel where he spoke. But he mentioned a few things. One of the things that he said was around the fact that Nigeria has now exited from financing through ways and means. And remember the ways and means conversation, especially into this new administration and how much debt Nigeria had, and just to see that they're not going or running to the central bank anymore to just print money in order to meet some of their debt obligations, looking at and exploring different ways. So I think that's quite important to highlight. He also used the opportunity to share that some of the economic policies or reforms that had been done by this administration is already yielding fruit, despite the fact that maybe it hasn't trickled down to real value for the Nigerian people, but that in a very short while, we'll see that. I thought what was really important yesterday was the opportunity for people, representatives from the manufacturing sector, from agricultural sector, and other key stakeholders to have an opportunity to task the government to invest in this sector. Bismarck Rewani spoke, gave gave a presentation as well. And what he had said, he gave a projection of what 2026 would look like for the Nigerian economy and some of the fundamentals that must happen to ensure that these things happen. But optimistically, he said that while fuel price will go up in the interim, long term, it will settle at 900 now. I don't know how optimistic it is for people, but it will settle and come down about 2026. And then, of course, I mean, so many things. I think you should read that article. People should read that article summarizing some of the key takeaways from yesterday's event by Access Corporation in the state newspaper.
Okay, let me start on the sidelines. You started by referring to Bosin Omofaye as a legend. And they were saying, oh, he takes exception to that. But of course, he's a legend in this profession. He has the knowledge, he has the experience, he has the maturity. He's not a Twitter journalist. He's not a Google journalist.
I have 61,000 people on Twitter.
I've known you now for many years. So it's good to have you on this desk, you know. So good to have you with your knowledge, experience, and maturity.
I'm humbled.
However, to go to the point, what Ayo was talking about, look, ways and means, Mr. Wale Edun saying, oh, you know, we are not taking ways and means, is good news to hear. But the truth is that when they abuse ways and means, it's a violation of the law. The CBN Act is very clear about the threshold. And this same Tinubu government, when they got in there, the first thing they did was to abuse ways and means. So if he's saying that, you know, we take it. But the more important points made at that Access Bank annual conference yesterday, those points were made by Aliko Dangote, who was saying that, look, provide an enabling environment for business. And also by Bismarck Rewane, you know, who was also talking about how this objective of achieving a 1 trillion naira economy can be achieved. So let's not put lipstick on it. Let's focus on the big issues. I see that the report is in this day today. Now, Japan, you talked about Japan. Japan is just trying to normalize the economy. 0.25, you said, you know, they kept the rate steady. And, you know, this is pivoting away and trying to normalize monetary policy in Japan. You left out China. China yesterday, or this morning, Friday in Nigeria, came up with LPR, you know, for 1 year, for 5 years. With 1 year, they kept it at 3.35%. For 5 year LPR, they kept it at 3.85%. So, you know, so you find that China has issues. They have to reflate the economy. They have to worry about, you know, the real estate sector, and also to increase demand. So when you are looking at the central banks, you know, Bosi said you left out some countries. You also left out China. Bank of England, yesterday, you mentioned that, kept this rate steady. But the expectation is that in November, the Bank of England, you know, may well again, you know, reduce rates or increase rates. But we look forward to November from the Bank of England. Thank you very much, Rotus.